Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on the world's biggest companies. Today we're looking at a company making a little move, a big move in terms of timing, so buckle up. We're diving into a report from Inception Growth Acquisition Limited, and what they're telling us is pretty straightforward. They are a special purpose acquisition company, or SPAC, which means they are essentially a shell company formed to help another private company go public. Think of them as a fast-track ticket to the stock market for businesses that want to skip the traditional, often lengthy IPO process. They raise money first, then find a company to merge with. Now, before we get into the nitty-gritty of what they filed, let's quickly break down what this company is actually made of. You've got units, and each unit is a package deal. It includes one share of common stock, which is like owning a tiny piece of the company. This stock has a super low par value, which just means its legal value is tiny, set at $0.001. So basically nothing. On top of that, each unit comes with half of a redeemable warrant. A warrant is like a coupon that gives you the right to buy more company stock later at a set price. And to top it all off, you get one right. This right lets you receive a tenth of a share of common stock. It is all designed to attract investors by offering multiple ways to benefit from the company's future success. Then there is the common stock, a GTA. This is your basic share of ownership in the company. As we mentioned, it has that incredibly low par value of $0.0001 per S-share, which is standard for many companies, but really just an accounting detail. We also see redeemable warrants. These are the coupons we talked about. Each one lets you buy a share of common stock. The key here is the exercise price, which is $11.5. This means if you hold these warrants, you can buy stock for $11.5 per S-share, no matter how high the market price goes, as long as you exercise them before they expire. And finally, the rights. These are less common than stocks or warrants, but serve a purpose. Each right entitles you to get 1/10 of a share of common stock. This can be a way for the company to sweeten the deal for early investors or holders of other securities. So why are we looking at this report today? Well, Inception Growth Acquisition Limited has filed a Form 8K, which is a report for significant events that a publicly traded company needs to disclose. This isn't a quarterly or annual report with deep financial dives, but it signals a change in their timeline. The earliest event reported here happened on the 10th of November, 2025. This is the date of the action they are informing us about. The company itself, Inception Growth Acquisition Limited, is the registrant, obviously. It is incorporated in Delaware, which is a very common state for companies to set up their legal base due to its business-friendly laws. This is their commission file number, a unique identifier assigned by the SEC. And this is their Internal Revenue Service Employer Identification Number, their IN, a way the IRS tracks them. They list their principal executive officers in New York. Now, the core of this filing is about extending their business combination deadline. SPACs have a limited time, usually 18 to 24 months, to find a target company and complete a merger. If they don't, they have to liquidate and return the money to investors. This is the crucial part. On the 10th of November, they put a little over $13,000 into their trust account. Why? To buy more time. Their deadline was the 13th of November, meaning they had just 3 days left to find a business to merge with. By depositing this money, they've extended that deadline by a full month until the 13th of December. This is a common strategy for SPACs that are close to finding a deal, but need a bit more negotiation time. It shows they are serious about finding a business combination and are willing to spend a small amount to get that extra runway. They also mentioned a press release that was issued on the 13th of November. This is important because it means they likely announced this extension publicly on that date. Press releases are how companies communicate news to the market, so this would have been the official announcement of their extended timeline. And Exhibit 99.1 is that press release. It is a part of this filing giving us the details of their announcement, incorporated by reference, meaning it is officially part of the record. Lastly, Exhibit 104 is the cover page interactive data file, which is basically the document in a format that computers can easily read and process, useful for data analysis. Then we get to the signatures. This is where the authorized people officially sign off on the report, confirming that the information is true and accurate to the best of their knowledge. Here we see the signature of Chu Kang Chow, who is listed as the Chief Executive Officer. The signing date is the 13th of November 2025, the same day they put out their press release, which makes perfect sense. So, what is the story here? Inception Growth Acquisition Limited is facing a deadline. Instead of failing and returning money to investors, they've opted to buy themselves more time. They've put in a relatively small amount of money, just over $13,000, to extend their search for a merger target by 1 month. This is a typical move for SPACs that are confident they are close to a deal but just need a little more breathing room to iron out the details. It tells us that they're actively working towards a business combination, but it also means investors will have to wait a bit longer to see what company they eventually merge with. The success of the SPAC hinges entirely on finding a good company to merge with at a reasonable valuation. This extension, while positive for keeping the SPAC alive, doesn't guarantee a successful outcome. They still need to find that perfect match. Now, from a Warren Buffett perspective, we're not seeing any deep financial statements here that would tell us about revenue, profits, or balance sheets of an operating business. This filing is purely procedural for a SPAC. The real financial story will come after they merge with a company. What we're looking at here is more about the management's ability to execute their mandate within the given time frame. A month's extension isn't a huge financial commitment, but it does signal they haven't found their target yet but believe they will. The risk for investors is always that the SPAC runs out of time or that they merge with a company that doesn't perform well. The opportunity is that they find a great company and the market rewards that combination. In conclusion, Inception Growth Acquisition Limited is playing the SPAC game, and they've just bought themselves a little more time to find a partner. It is a small step, but it keeps the possibility of a merger alive. For investors, it is a waiting game. We'll need to watch for news of their actual merger target to make any real judgments about the company's future direction. The main risk here is simply not finding a suitable merger partner before the new deadline. The opportunity, of course, is finding a valuable business to bring to public markets. Alright, that is our breakdown of Inception Growth Acquisition Limited's latest filing. What is your take on SPACs and these deadline extensions? Are they a good way for companies to go public or a risky bet for investors? Drop your thoughts in the comments below if this kind of deep dive into corporate filings helps you understand the markets better. Hitting that like button really helps us out, and make sure you subscribe for more decoding of your favorite companies. And don't forget to join our Discord community, linked in the description, where we chat about these things and more. Thanks for watching, and we'll see you in the next one.